Hello, my name's Ian Hawkins. I'm the News and Investigations Editor here at Swoop. Today we're talking about working capital, and I'm delighted to be talking to our very own in-house expert, Sam Lockwood, about all things working capital. Sam, great to talk to you. What is working capital?
Well, working capital is really the day-to-day requirement of a business to fund payments that are due out versus sort of the payments and balance the payments that are coming in. So typically it's all about sort of relatively short-term cash need, but it can represent a cycle throughout the year. So some businesses will have a working capital requirement at peak periods, say maybe through Christmas and through summer trading, and at other times of the year they'll be absolutely fine, whereas other businesses may have a working capital requirement pretty much monthly, throughout the year. So it does vary a lot from business to business and depends on really the dynamics of how you get paid and how you have to pay your suppliers or your own staff as well. So as I say, it's all about that working capital need. Really is about that short-term requirement for managing cash within a business.
That is kind of my second question, which is why might a business struggle to have enough working capital to cover their needs?
It's predominantly around a kind of a growth need or a short-term requirement, which is just about balancing that income of money into the business versus kind of the outgoings that have got to come through. Certainly what we've seen in the last 18 months is a lot of government support come through to help fund businesses, but a lot of that has come in the form of long-term debt. But as we've traded through that last 18 months, we would expect that certain businesses will have burnt through that money and would have had to use that money in order to keep themselves trading. And now, as they're looking to grow out of that and as they're looking to expand and do more, normal sort of conditions start to apply. So, you get the normal kind of pressures of running a business where you've got various payments that have got to be made short term and you're waiting for the cash to come through. So, I think that's the main thing from my perspective, is that we are seeing an increasing number of businesses looking at their working capital and saying, well, thanks very much for the long-term help. And, I've got to now repay that over a longer, over the next couple of years. But actually, I've got a requirement over the next, say, 6 months where I've got to just kind of keep my business trading and to manage my cash flow through this period as we're sort of trading out of it.
What solutions is Swoop offering to help people get through this?
There's a danger that you sort of try and do a one-size-fits-all here. The reality is that doesn't always work. So each business has different requirements, and it all comes down. Working capital is all about how the business works and where the money comes from, when it comes through, that sort of thing, and all the timings of these. So it is very bespoke to each customer. But working capital solutions vary from a revenue funding type model, so sort of an MCA solution or an e-commerce funding solution, through to just a straightforward overdraft to enable you to dip and help manage your cash flow through that period of time, through to things like invoice finance as well. But as I say, it does cover a full spectrum. So your actual working capital requirement might be that you're buying an asset, in which case actually something like asset finance can help ease that sort of lumpy cash out for that acquisition or that purchase over the period of the next period of 6 months or so. So I would say working capital is an interesting one. A lot of companies come to us with working capital requirements, but actually the solutions are many and varied.
Have you got any good examples of how we've successfully helped people?
Some examples of where we've helped our client base predominantly have been in the hospitality sector recently. We've seen a lot more kind of inquiries in that base, and again that has varied from receiving various levels of support throughout the pandemic and throughout the various the lengths of the various schemes, government schemes. But it's also now, as I said to you, that typical profile of opening up and starting to trade again and needing to meet payments and other bits and pieces. And although these are customer-facing businesses that are sending business to consumer, therefore they're getting cash payments up front, that's still not necessarily helping out the cash flow, and there's other bits and pieces that they need to spend their money on over the next sort of, the next period of time. So something like a revenue funding solutions works quite well with that sector in particular. So looking at a merchant cash advance or looking at some level of revenue funding into that space has worked particularly well, and we've helped a number of customers out in that guise. So we've also looked at invoice finance solutions for some of our customers. So we've looked at things like selective invoice finance. So selective invoice finance is where you choose which of your invoices you actually want to fund. So that particularly works for if you've got a really good debtor. So if you happen to be, I don't know, a food producer and you're selling to a supermarket, but actually the majority of your other customers are many and varied other sort of food wholesalers, then actually, that supermarket represents a really good asset on your debtor book, because they're a very good debtor to sell. So there's lots of funders that will look to fund that particular debtor for you, which does help free up some of that cash instead of waiting for the supermarket to pay you. And that means that you've got the cash liquidity then to trade through and solve that kind of working capital issue. That's two types of solutions, one which is sort of more business to consumer and one which is more business to business. But as I say, I think there's lots of different solutions out there. We have actually also looked at things like recovery loan solutions, which again are another sort of term loan solution to what should be a short-term problem. But actually, if you can see that cash need is now, and actually as we move through the trading period and as we move through the next sort of 12 months onwards, that cash buffer that you're getting through will actually solve a lot of the problems, then that's a perfectly suitable solution for your business as well. So as I say, it is varied, and we do see a wide range of inquiries come through, but those are just some of the things that we've done for customers in the last 6 months or so.
Sam Lockwood, thank you so much for your time today.
Thank you.